is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, noon till 1 p.m., 877-927-6648. Fascinating day. The S&P is up 75. The S&P is unchanged. S&P is up 25 cents. That's quick moves, down 25 cents. 27.18, 27.17. What we're looking at here is the pattern that I've been focusing on, is that arch formation. There could even be a little mini double arch, but it's really a larger arch formation. Lowercase h, think of that pattern. There should be a failure at some point, and we should be taking out the 2640s support in the next, maybe the next few days, within a week. What's really important about this is that the 120-minute chart did have a nice rally. It's stuck right at the 200-period exponential moving average. Make it real simple. If the S&P closes on any 10-minute bar, closes under 27.13 today, the chances are we're going to go a bit deeper down. And if there's another rally, as there was earlier this morning where the S&P 500 went into the 27.34s, that's 14 points, 16, 17, 18 points higher than where we are right now. If there is a push into the 27.27s, even 27.25s, that would say, okay, just a little consolidation after the big run-up yesterday. But within the context of what I'm looking at, we'll go to right now, we're going to go to the Dow. Look, the Dow daily has had that very sharp pullback. We're in the process of making this H formation right here. 25,800 was the turnaround point. Chapman wave 5, we made the 1 down. Leg A, we're trying to make the 2 up. Hit the 9-period moving average yesterday. Today I said, good chance we're going to try to test the 25,040 level in the for a bounce, around about 25,000 to 25,040. We went to 24,995, then pulled back. Something intraday happened, but there should be resistance. The MACD is very negative. Stochastic still very negative. On balance forms trying to rally. A lot of resistance. I'd say that a best case basis is if we manage to get to the 25,200s, if there's another buying spurt over the next day or two. But that's going to be the test. If you look at the 120-minute Dow chart on the left here, you'll see that there was a rally that went right through the green line, trying to test the 200-period moving average of 25,038, missed it, went to that high of 24,995, pull back, now hugging the 9-period moving average. The MACD is actually crossing positive. I thought there was a chance to deflect today. No, it's actually rallying quite nicely. And the stochastic's at 61%, nothing great, but it is at least not bad action. So now what we're going to be looking at is we'll go on. I'll give you parameters right now. Dow should have good support at the 24,680s. It's at 24,766 right now, so about 70 points lower. That's going to be the big test. If it takes that out, it'll keep going lower. But I still see choppiness, just a sideways choppy action. Weekly chart, very negative. The 120-minute chart, we just discussed it. Let's get out of this 120-minute chart. Let me show you something else. Within the context of the monthly chart, remember that 9-period moving average on the Dow at 23,900? We took it out last month. Now we're running above it. But I'd say if the Dow starts to trade in the under 24,300 on a closing basis for 1 week, there's just a really good chance. I'd put it at an 80% chance that we're going to retest the area of the 23,360 low. Doesn't have to break it, but it could go down there. Could go down there quite quickly. Really important to break into the 26,000s. I'm not sure yet what's going to take it there, but let's just see how that works out. SPX now, I can run through this quicker. S&P trading at 27.19, down $1.50. Very important to hold the 27.09 area over the next 2 days, and at least attempt a move to the 27.36s. Daily chart making that arch formation. Weekly chart, same thing. Monthly chart, wow. At any point, if the S&P starts to trade under 26.34, closes there on a weekly basis, that's not going to be good. Let's go on. Let's go to the QQQ. Now, the QQQ has shown quite a bit more strength today. Not so much, it's up 35 cents at 168.19. I think there's a chance that it's going to try to make a high for the peak C, the gray peak C at 170.73. So it goes to 170.74. But the all-time high is at 170.95 on the 26th of December. Very important phase right now, because if the QQQ Power Shares Trust Series takes that 166 support, I think we go down quite quickly. So we're watching all these, all on the cusp, as they say. IWM, nice move up 57 cents, this IWM, in just a world of its own. Didn't know that it made a peak D and it should be going much deeper down. In fact, it's up today, 57 cents at 154.30. I think it's stuck between the low 156s and key support in the 151 area. We'll see what happens with this thing on the weekly basis. Now let's go to gold. Gold is having just a fabulous move. One of the things I said to my subscribers to my opening call on Friday is that we're going to go long a gold stock as a proxy for gold because it had held very well and the dollar just couldn't break out. The dollar was really stuck. So we've got to move up 19 points at 13.39. I think that this is a really nice move in gold. This is the one that I said we need to see very soon, because if it failed and it started to take out the 13.20, 13.15 key support area, then all of a sudden you're looking at the 12.97 200 period exponential moving average in the weekly chart as the next key support. This was really important. I don't know if it can sustain itself. We'll see if by today's Tuesday. If on Thursday at this time during my show, gold is above 13.43, that was the high of the 26th of February, I will say to you, finally the weekly chart looks like it's made a cup, a handle, and it's now attempting to get back into the that high that was made at 1370.5, just step by step. And the gold stocks, as I say, are doing quite nicely. We're in a very interesting position. We have a couple of shorts and we have a couple of longs. The longs are doing nicely. So far, the shorts are also doing very nicely. So we'll see what happens there. Let's go on. We're going to go to the dollar DXY. The dollar right now is trading down 45 cents at 89.57, 49 ticks, I suppose I should say, at 89.57. Another failure mode. Remember I said lowercase h can go to another h, and it could be a bigger one, and that's what I think we're looking at here in the dollar. So that tells me that the euro-dollar currency pair, it should be interesting. Yep, there it is. A nice move up at 1.24, and what I said is, if you could see the euro-dollar, if the euro is able to get above 120, what was I think it was 123.40s, that would be good action. Here we are at 1.240, and the USD, JPY, just before we go to the break, the yen is trading, it's down a little bit. It's holding okay, but it's not looking great.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So, as I was saying, the yen is looking very weak. It's not breaking down. It's just looking very weak. My weekly chart doesn't look very good. Monthly chart doesn't look very good. I suspect it's going to go a little bit lower. High-grade copper right now. High-grade copper, a nice move up today at 316s up 0.03. Holding, if it breaks under the 310 support, that's not good. It could even run a little further. I'm actually kind of favorably inclined towards the commodities right now. Certainly in our portfolio, we're leaning more towards that area. We'll see what happens. This is a market that looks like things are going to move in one particular direction, cyclically, that is in sector-wise, and then all of a sudden they stop dead and reverse. So I know you need sustainability now in whatever you're looking at. I think we're almost done with this initial, okay, up 44 cents in the TLT. It's just holding, yes, not looking great. If I look at my weekly chart of the 30-year, the white one is a TYX. It's down, so we've made a peak C in the weekly, made a peak D in the TNX, the 10-year yield, and the 5-year yield is possibly making a peak D today. We'll see what happens just at the beginning of the week. Not sure exactly where this week will where we'll close out in the yields, other than to say there's a really good chance that they're going to take a little bit of a rest after a huge move up, and then in about a week or two, I think that they start to move higher again. So let's just see where that is. Look at the iShares of the Timber and Forestry ETF, Wood, WOD, holding well. Yeah, it should be breaking down. It's not, but it's not breaking out, but it's still holding pretty darn well. It's the bounce that I was anticipating in the Philadelphia Housing Index. It is coming about, but it's at the lower level. To me, this just looks like a bounce, and it's going to be going lower. Now, I'd like to get out of this. I should show you something here. I haven't looked at it for a while. This is the South African index, South African stock index, Dow Jones. Now, they have a couple of goals, as I recall. I haven't looked at it in the makeup, the components for years. But this was not the gold South African index. This is the stock market itself. So holding very well. It's gone to a leg E. Monthly chart, this is, broke that tremendous long-term 7-year. It's actually more. It's an 11-year slightly rising trend line. Broke it and closed above it, and it's above it now. And that says to me, that's a very interesting thing. I'd like to look at the makeup, but it does have a couple of the gold, and maybe it'll be a mix of some of the commodities in this index. So so let me just get out of this because I need to use that space. Close workspace, save, always do that. So a question in the Dan, any old friends of yours facing expropriation of their farmland? You know, that happened in Zimbabwe. They haven't done that in South Africa. I don't know if it's been discussed, but only discussed. I don't think it's really seriously contemplated yet. I think that's in the cards later on. But no, it's a different government mindset. They haven't yet appropriated a land, but there are other things that are going on that are nefarious. Let's put it that way. But you know, it's a pretty big country, and it has a huge immigration issue in South Africa, something that they rarely speak about. But there were times when they were having from the other countries, because South Africa, even during apartheid, blacks and Africans were coming from other parts of Africa to South Africa because the economy was so good and they had gold and silver. So it's just a different, things are a little different there, and we'll see what happens. I know that they're having a tremendous water shortage. Sometime in April or March, they're going to stop folks in Cape Town getting water. I don't know what they're going to do. That's what they say. They were offered salination from Israel, but it was refused by the government. They didn't want to save their people for political reasons. All right, so let's just go on. Let me go through backwards. Question now, Walmart. Walmart is, in fact, down $1.21 at 88.77. You know, this move in Walmart, this move in Target, well, this move in Procter & Gamble, well, look at these monthly charts. This is telling me that we're looking at a market that at this particular point is extremely selective. If you look at the SMHs, just let me finish the thought. The thought says that if you're looking at the retail area, if you're looking at even stocks that you wouldn't consider just pure retail because they're really multinationals like a Procter & Gamble, but they all have the same kind of charts. McDonald's was a leader at one point. Let me just do this. McDonald's has made a peak E in the monthly. All of these are hat-trick tops. A peak E in the weekly. You know, it was on my list as a short, and I completely forgot about it. I just missed it completely. Oh, my goodness. That is silly. D, E, and lo and behold, we get an F. We get an F. Oh, wow, man. In the Chapman Wave methodology, when you can get an F in the daily at the same time as you've got an E in the weekly and an E in the monthly, you are so set to have what's called the hat-trick top in the Chapman Wave methodology. The implication being that not only are you starting smaller sell signals to sell modes, but they're going from daily to a sell signal, then a sell mode in the weekly. The implication is that there's a very quick move in the monthly chart to a sell signal that invariably, as it goes to sell signal, it almost like within a month will confirm that there's a monthly sell mode. So we've got sell mode in daily, sell McDonald's, sell mode in weekly, sell signal in the monthly, and who knows, by the end of March, this could have gone in by month 2 after the top. Could be in a sell mode in McDonald's. Wow. So that's why I'm saying this is a very diverse and bifurcated market. If you look at the semis, finally the SMH made that leg D at 109.67 high today, doji candle. I got to watch this really closely because we might not be getting day 2. That is, sorry, day 3, Wednesday, was where I thought the market would turn around. So we held off shorting the index until I thought it would be tomorrow. We'll see. But this is leg. I'm not going to say F in the weekly chart. I just don't know. It has the look of a single leg A, but A, that says you're still going to go B, C, D in the weekly charts, even higher. I think the semis are due for another period of rest. So I'm calling this an F right now. And the monthly chart is in an E. So everything's set to say, watch out, we're getting real close to all the little ducks sitting in order. We don't have the semis. We don't have the XLK yet. Did that make its D? Yes, it did make a D. A peak D at 69.71, sort of making a right shoulder failure here. Peak D possible in the weekly chart, and only a leg C in the monthly. So it's the tech sectors that is really keeping us going. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. So the questions in the den were Walmart. What's the downside target? And what I'd say that, well, I said target has a target of 66. So TGT trading at 71.10 down 4 right now. I would put it at 66s, which is the weekly 200-period exponential moving average. It's not going to happen overnight, but that's what I think we'll go down to. And then the question was Walmart. I said Walmart's target is target. Who knows? It might even take it over, TGT. However, on a price basis, Walmart, I'm thinking And all of this is contingent upon making a lower low than was made a few days ago in all of these. If it does it, the quicker it makes it, the greater the chances of that being a target sooner. But if there's a bounce, the targets could be a little higher and take a little longer. So I'm looking at Walmart, and I'm saying that the area of support would be in this little cluster formation right here that was made back in July of 2017. So I'm looking at 82 to 78. And the other one that I'm missing here is Walmart, Target, and McDonald's. McDonald's, it's a little different. Of course, McDonald's is an international, whereas the others are national. So I'm looking at McDonald's, and I'm saying, if this is the start of a move to the downside, if McDonald's at 150 right now takes out the 147 support, then, I think I did it on the weekly chart, yeah, then the area that's going to be absolutely critical is these little small doji candle monthly charts that you can see one in the 131 area. But I would just go step by step. There is no support under 148, which is the low of June June the 16th of 2017. And we've already hit, last month we hit 146. So we've already nicked that. So I suggest to you that if McDonald's takes that 145 support on a monthly basis, it could be a real quick trip. I would not be surprised if over a period of 3 months to 5 months, you see the 140 level taken out and 137s. I'll be looking at this because the monthly chart has a 200-period moving average of 127, but it's got a history. It's hit it once, which is a fantastic buy back in August of 2015 at 87.50. It missed it on the big move down, October of 2016. It went to 113, and that level of support was on the 200-period moving average, 103s. So I'm suspecting that there's some kind of a trajectory here. I could even draw a straight line. Just join. This is an easiest way to do it. Learn how to do trend lines. And the trend lines, yeah, that's where I was. The 138, 137 area. That's going to be key support. McDonald's. So I had a call yesterday. I misinterpreted the call. I thought that the person really just wanted me to discuss in kind of a newbie, wanted to know how to go about different things. And I hope she's able to call again, because that's a really nice discussion. I'd like to make, maybe even if she wants to call, maybe tomorrow first thing in my show. Let's take we can take a whole session and just talk about what do you do when you're looking at chart prices? How do you do some very simple techniques to be able, you have to even do the Chapman wave. How do you look at this trend line right here? An incredible trend line in Walmart, in McDonald's, that went from, look at this, from that peak A that was made March of 2015 at 101. It hits it a whole bunch of times and stops at a peak C in May of 2016, 131. And that line goes straight to where? It just nicks it over the last 3 months, and that was it. And now we're way below. How do you draw a trend line like this? What do you do? What does it mean? How can you use it? So it'd be nice to go through things like that. So if we get our call, I think it was Jennifer. I'm not quite sure. But hey, call again. I'd love to go through that. What do? I'm a newbie. I'm looking at charts. You know what happens with newbies? You hear something. You hear applied materials. Applied materials is, and then nothing. And then all of a sudden, applied materials. And 4 days later, someone says, so suddenly you say, hey, AMAT, that's on my watch list. And then you're looking at it, and it kind of jumps a little bit more. And you say, oh, I got to buy it. So you grab it and you buy it. Do you buy it kind of at the top? Do you buy it at the bottom? Then what do? Now you've got the stock. You weren't thinking of how do I sell it. You were thinking of how do I buy it. Well, you've got to be thinking buy and sell at the same time. That's the art of trading. That's the art of position playing, because then you know your risk. And we'll talk about that. Applied Materials just made a leg D, gap up underneath the previous high of 60.89, the week of the 17th of November. Leg D, we're going to watch this closely. The technicals are still very good. And but if the semis finally start to tank again, This time it's going to be a lot more serious. So we're watching this very closely. So now let me do this. I had a whole bunch of questions. I'll go from the top. GT wants to know about Boeing. Boeing is trading down 5.53 at 347.22. We are actually short Boeing, just in full disclosure from higher up. Made a high at 371.60 on the 28th of February. It's pulling back here. It went down to 335. Hey, 40 points, almost 40 points. That's huge. Not as big as it was when it went from 361 down to 317 back in early February. But it's showing that Boeing is finally getting a lot of volatility. What does the word volatility mean in the stock market? It usually means down. People don't say, what a volatile market going up, 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 up. They say, what a volatile market going down. So keep that in mind. So here we are. Boeing is under the 9-period moving average. The MACD is very weak. Stochastic is very weak. On balance, volume is pulling back. The weekly chart still shows inside strength, internal strength. But it made a peak D and it touched the 9-period moving average yet again at 338, bouncing. If Boeing closes at 336 at any point, together with the PPA, what's that PPA? Nobody even heard of a PPA. PPA is the Power Shares Aerospace and Defense ETF. If these defense stocks start to pull back, Raytheon, this will be the first time. Maybe some peace talks in Korea, North Korea. I don't know what it is. But if you suddenly see Boeing down about another 10 points from where it is now, if you see Raytheon below, it's at 213, made a half 222, you see Raytheon trading at 207 in the next week and a half, that's going to say, hey, for the first time, we're looking at the defense, not defense meaning Procter & Gamble. Usually we say defensive stocks. These are defense, military, and aerospace. If these stocks start to turn down sharply, GD, which is General Dynamics, AB, hasn't made leg D yet. If you watch this at 223 right now, made a high just the other day of 226, was it? 227.78. If this goes underneath 217 at any point in March, that's going to say, defense stocks are going to be taking a break for the very first time in quite a while. So we're going to look at a break coming up. Dow's down 117. Got a bunch of other questions. You have a lot of letters on your charts. Hard to understand where market is going. Yes, I know. Where is the S&P by the 16th of March, and where is it on the 30th of March? I'll try to deal with that when we get there.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks, we're back. I don't want to run out of time, so I have a couple of questions. The question on the 16th, where will the S&P be on the 16th of March? I'm thinking 26, somewhere around 26.19, 26.20, but that's a long way to go. That's what I'm thinking. And then it was asked again about what about March? Let's do one thing at a time. And let me just make it real clear that if the, I don't think it will right now, but you never know. If the S&P takes out the high of the 27th of February, 2761, then you've got to raise that level a little bit. So that would make it 2640s. I still see an arch formation going down. Another question came along and said, in the Dennis, where do you think there's a chance that we will test the low? And if so, when? The low that was made in the S&P on the 9th, which is at 2532. Let me just type that in, 2532.69, 2532.69, and that was 29. It's a really tough question because of the diversity of this market until I see that the techs really start to pull back. That is the SMHs, the XLK, and the different sectors within that. The QQs would be included. I think that there's a sideways choppy pattern that we're looking at right now. So I would only say that if the sooner we take out the low of 3 days ago, 2647.32 in the S&P, the quicker we're going to go to the 200-period moving average of 2580. Now, do we go down to 2532? I can only say that if the SMHs over the next week and a half start to drop, and instead of being at 109 as they are right now, the SMH, the Semiconductor Market Vectors ETF, is trading in the 102 or lower area. A week from today, Tuesday? No. A week from Wednesday or Thursday. In other words, later next week, if that happens, then we're going to be going down quite deeply. And you have to wait for that. So they're holding the market up. Next question was the XLE. Yeah, the XLE is just, I looked at it last night and I thought, hey, am I getting some kind of a buy signal here? And then I looked at it in the monthly and I said, no, that's just not a good looking chart at this particular time. So XLE at 67.75, it needs to break into the 71s and then you can be somewhat impressed. But until then, it's just a trading band. Could rally to 69, then pull back again. 66 to 65.50 is really key support. Just keep it as simple as you can. Next question was, in terms of the relationship of that internal low and residual low that I always talk about, it's a good question. Has the S&P already made, in other words, it made the internal low at 25.32 on the 9th, rallied strongly up to the 27.89 area on the 27th, pulled back 3 days ago to 26.47. Was that an internal low? And we just saw the residual low. I don't think that's the residual low. I think it's just a whole process that says we need time to consolidate. But in the meantime, don't be afraid. If you see stocks that are looking good, you can just buy and put your stop in. If you see things that you want to short, just don't be afraid. Do the job, and just let the market tell you what it is. Our longs are so far doing nicely, and the shorts are doing okay. So that's the way you want to do it, separately. A quick question about HQY. HQY is in fact Health Equity Inc., trading at 58.03. This, just on a purely visual basis, looking at it right here, A, B, C, D. This looks like the daily is attempting to make a leg B. I'm not sure I want to call this anything but a new leg B if it can go above 58.28, the high of the 28th. Yes, it looks very good. Watch the 54 area for key support in the shorter term. I like it. I'm going to make a note of it. I don't know if we can get it in right now because it's already moved so well. But on any big pullback towards the 55s, maybe even the 54s, that's something to look again. GSVC. Yeah, very nice. A, B, C, D. Yeah, this is looking good at 836. This is, what is it called? GC, oh, that's very explanatory. GSV Core. Capital, GSV Capital Core. Yeah, I'm not sure what it is, but I must tell you that, would you add to this now? I have to tell you, I'd much prefer at 836. I'd much prefer to add to it in the $8.02 to $7.82. That's the area I'd be looking to add. Two reasons. One is, that's a tough call for me. Would I add to it? Would I add to it, meaning that you've already got a core position? I would add to it, treating it as an experiment in a potential breakout because it's acting so well in a market that's acting very shaky. Yes, I'd add to it because you've already got a core position, but this one I would definitely, at 833 right now, I probably would say $8 is the stop I'd have. Or if you want to go to 781, the 9-period moving average, I wouldn't do it. I'd make it just a little bit below the low of today, so that maybe 8, you can get it now, but 8, around about 810. If it takes it out, the reason why I'm saying to you, just a small position to add to it, because it's really the feeler position, is it's broken so nicely above the 200-period moving average in the weekly. That's more now propellant rather than a magnet. You know how I talk about magnet and propellant? The magnet is where it tracks the price. Propellant just says, I'm not going back there. I'm just going to be pushing away from it, either up or down. This way it would be up. So if you've got it now, and all of a sudden you're looking at it not taking out the low of, let's say, 817, but in fact it goes to 844 tomorrow, and then suddenly on Friday it's at 870, you've got yourself a nice second trading position. Now, if you've not got it at all, I just say have to wait for the low 8 to the high 7.90s. That's the way I would start looking at it. Next question I got, Caterpillar. So the big cat trading at 153.17. It's either making a perfect H pattern, which says that the weekly chart is going to make a cup formation, and this is going to go soaring right from 153.26, where it is now, back to the 165s, and to do it quickly. I think otherwise. I think Caterpillar is due for a bit of a rest, and that there's a good chance that if at any point in the next 3 days You see Caterpillar trading under 149, 4 points lower. It's going to make almost like a 1-to-1 to the downside and take out the 142.88 low. Would I buy it or would I short it right now? Let me think about that. When I get back, I'll make some decision here. My eye just says this is not, you haven't got your best risk reward. I'd rather do it either higher or lower. I'll be back.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archived workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
A couple of questions, in fact, for people about SQ, which is Square Inc. point-of-sale software to manage receipts. I said that I liked it and that it had a spectacular day. The question was, should I be selling some? And I said, no, rather raise the stop because it's acting so well. The 48 should be good support. Well, it hit 49. What did it hit? 49 something other yesterday. 50.50. It pulls back today to 47.81, and now it's at 49.71. This is, the point of sale. I mean, where was I yesterday? Or Sunday maybe. And I'm listening to someone who says, it was last night in a meeting. They were talking about doing some event, and they needed to have some form of payment. And somebody said, oh, yeah, you got Square. They actually called it a nickname, I guess. I don't know what they called it. But it was Square Inc. So that's where you can slide your card. They have these, you got art shows and stuff. outdoors, and they have their little computer, a little iPad, and then they have a little gizmo and they slide it. So this, I think, is fantastic. So the chart looks great. It's broken out in the weekly chart. It looks good. So I'd say keep your core, raise the stop on some part if you're a little nervous. But so far, I don't think you need to do anything. And then I said, just keep a trading stop on this and see what happens. That's the way I'm looking at it. Next thing, final thing, as we're about to go out, look, the Dow's now only down 41, S&P's up 2.70. Just keep in mind that we aren't quite done. We were very oversold. Market needs to just breathe a little bit, needs to exhale. So this is there should still be a little bit further to go on the upside. And then we get the real test. What happens? And I think the SMHs are going to tell us a great deal about that. So keep in mind, there's a lot going on in this market, but as long as it's diverse and there are sectors that are doing very well, you've got to be a little bit careful about getting too clever about the short side. Be specific, stock specific, and even then, buyers will keep coming into the favorites. We'll see what happens. So I'm listening for the music. There it is in the background. Have a great day. I'll be back tomorrow. And stay tuned. You've got Steve Rhodes, you've got Dave White, you've got Tom O'Brien, and you've got right here Andy Heck. So check out my opening call. Hopefully you'll find it beneficial and profitable. I'll be back tomorrow.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.